CIBC Capital Markets releasing its official 2026 price target. The firm expects the S&P 500 to reach 74.50. That's a 9% gain from today's close. Chris Harvey is behind the call. He is CIBC's equity and portfolio strategy head. It is his first price target with the firm since leaving Wells Fargo Security earlier this year. Chris, welcome. Nice to see you. Congratulations on the new gig.
I appreciate it.
But you don't see 9%, just 9%. You see a pullback first.
That's right. And it has a lot to do with what you were saying before. Risk at this point in time is just too expensive. You're not getting paid for it. And so we think there needs to be a repricing of risk. The other thing is you have a ton of catalysts, or we think you have a ton of catalysts out there. There's a lot of macro factors that I think people are sleeping on. People think that the transition in the Fed is going to be seamless. It won't be. People are sleeping on USMCA. In addition to that, this is a time of year where people begin to guide down expectations. It was a great year, but we have to manage expectations down. All this can really, lead up to a repricing of risk. The underlying fundamentals, they're okay, they're fine, but risk is just too expensive at this juncture.
So when you say repricing of risk, do you see a reallocation away from some of the things that trade much higher and maybe therefore one perceives as more risky into something with a lower PE?
Yeah, I think, I would say there are some of the risky stocks are ones without a PE. Right? If you look in the biotech space, and there's some reason for regulation, FDA, for that to occur because of scarcity value. But at this point, I think that's really played out. So can people move back into, I think what they're going to move back into is better risk rewards. And yes, they're going to have valuations. They're going to have an E. Just because you have a great story, I don't think that's enough anymore.
Chris, understanding it's not a straight line to get there. You have to. And Tim is pointing out that Chris Harvey brought you candy, and you didn't bring me candy.
I'm sorry, keep going.
No, which is, and I told what I said to Chris earlier, but we'll save that.
Well, we will save that.
Your earnings, you must be somewhere between like 325 and 350 in order to have the multiple and sort of where we are now. Is that fair?
Yeah, that's fair. So it's a little bit more than 325 for 2027. We're expecting a little bit of multiple compression toward the end of the year. But yes, we're expecting double-digit growth this year and next year, but a deceleration.
Chris, you just mentioned higher quality, ones with PEs, that sort of thing. It used to be, over the last couple of years, mega cap tech, right? That was kind of a defensive trade for all intents and purposes, but they also had the growth, and they had this tailwind of the secular shift. How do you feel about that?
There's still some mega cap tech that work, right? If you look at Microsoft, it's a pretty good risk reward. However, we're finding opportunity right across the board. It's not just mega cap tech anymore. And the other thing is we were expecting 7,000 on the S&P this year, right? One of the reasons we were doing that is because we were expecting mega cap tech to have multiples expand, not just multiples expand, but margins expand. That's occurred. Now we're looking for places where the fundamentals can change, and that we think that's in the med tech space. We think that's in software. We think that's also in financials. So it's a lot more diverse this year.
Yeah, that was my question. Financials, what do you do with the move in financials at this point that in many cases, Goldman Sachs, no, AI stock, no. I mean, it's crazy the move in Goldman. By the way, I believe they deserve it. But there's no question valuations are hardly cheap there.
They're hardly cheap. What we were saying is we think they need a pause or a pullback. Underlying fundamentals, again, they're fine. I don't think we've seen the whole deregulation play out just yet. Some of the credit card companies have pulled back first. Maybe you start looking there. Some of the insurance companies, if you're looking for diversification or low vol, it's over there. But we really want to see a pullback in some of these really strong performers.